8 a.m. Chicago time on Thursday, the 9th of July, 2015. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. News-wise, overnight, European equity markets are higher and rebounding on Chinese equity improvement. The Greek stock market will remain closed through July 13th. Chinese measures to stabilize the market start to kick in. Asian stock markets rebound. Shanghai has biggest one-day rally since 2009. Again, extreme volatility in there. Gold is lower this morning. U.S. Treasury Secretary Jack Lew and IMF head Christine Lagarde are calling on European leaders to grant debt relief to Greece and help the country avoid an exit from the Eurozone. Earlier today, the Bank of England's committee leaves interest rates unchanged at 0.5% as expected. And then a half hour ago, we got initial jobless claims, 297,000 versus 275,000, so slightly worse. Continuing claims, 2.334 million versus 2.25 million week on week, also slightly worse. Going forward, we're looking for 9:30 Central EIA natural gas storage, 87 billion cubic feet. And then as far as speakers, we have IMF releases. Well, we just had the IMF release of World Economic Outlook. It actually reduced the World Economic Outlook growth from 3.5 to 3.3%. It cuts advanced economies 2015 GDP from 2.4 to 2.1%. So sort of a bearish outlook by the IMF on global growth. Other than that, we have Juncker speaking at 9 Central, half hour after the open. And then at 9:15, we have Fed Speaker Bernard, who's a voting leaning dove on regulatory reform in Washington. At 10 o'clock, we have Euro Speaker again, Juncker. At 12:10 Central, we have Fed Speaker George on U.S. economy and monetary policy in Oklahoma. And then at 5 p.m. Central, 6 Eastern tonight, Greek deadline to submit comprehensive proposal. These deadlines don't mean anything anymore. Every time they draw a line in the sand, they end up walking over it and drawing a new one. At noon today, we have a 30-year bond reopening for $13 billion. And that's about it for news. Let's switch over to the technical picture here. So yesterday, Hypo 1 did not work at all. So Hypo 1 this week has been 1 for 3. The market went the opposite way. Yesterday, the prediction was, the primary idea was that if the market could hold this 52 to 53 area and bounce, then we're likely to push into the 77. The 77 comes from the high of last Thursday right here. We're looking for 77 and for it to break this somewhat weak high that it left behind and to start to move out of the balance zone and into the gap zone above at 83 and a quarter. Let me move that down one. At 83 and a quarter. That did not work. By the time the market opened after the trader bite was done, it was stuck in the 57.58 area. It had a quick test up to 61.75. Couldn't quite get to the LVN at 65. This is a single print zone up here. As you can see, we got some single prints from 2 days ago that started at 64 quarter and go up to about 68 and a quarter. Couldn't quite get up there, and it immediately turned over and breached that 53 area. And then from there, the expectation is to go to 48 and then to push to 43.50. You can see how it did that. It bounced. It came down to 48, 48.50, up to the mid, down to 47 and a quarter, all the way back to the open, and then back to 48 again, and then it broke down and it tagged the point of control, as we would expect, on failure to hold this LVN and move into the next high volume area. Um, After it tagged the point of control, pulled back to mid again and new mid, so a new test, pulls back to mid again, and then rotates back through the point of control. Looks like a weak low now on the low, 36 and a quarter versus 35, with some pretty good volume on the close on the sell side. You can see the delta here. This delta, this volume delta or volume breakdown, basically means that there are many more, quite a bit more, selling going on in this balance here. While the market was chopping around in the last half hour of trading, there was a heck of a lot more hitting the bid than lifting the offer. So aggressive sellers step in. This shifts the point of control down to the bottom of the range. The normal behavior in this situation is for the overnight session to drift lower as the auction is cut off. We expect this impulsive move here to have somewhat of a continuation. We did not see that. The overnight low was 39.75. We ended up taking all of the range from yesterday back and pushing to 63 and a quarter. If again, 63 and a quarter is about where that LVN zone starts, or the single prints start. So the way this was set up yesterday on the close, I would have expected the 35 to be breached. If we look at the overall picture, again, this whole discussion is about establishing the story, the context, so that when we put on a trade, we have a strong hand in that trade because it's built on something that the auction that has been going on, and it has substance. So you can see here we've been stuck in this range since the 29th. We've been growing this microcomposite profile, the point of control of which is 57.50 now, and the market attempted to get up above it yesterday, could not, and then has pushed down to the low. So these two lows here make up a weak low, with the point of control at the low here. I expect this to be taken out eventually over probably the next few days, but it's hard to tell here because the market's driven by news right now. The only reason we're up here, as far as I can gather, is the additional intervention and money that's being poured into the Chinese markets and causing that big rally in the Shanghai Composite today. So overall, we are trading above the point of control, and we're trading in this gap zone that we left behind yesterday, and it looks to me again like the overnight high is likely to be taken out. So we've been just testing the extreme low, then testing the extreme high, then testing the extreme low and the extreme high, which is what a noisier volatile balance is likely to do. So the market's trading as expected, but that does not make it an easy trade. It's a fairly difficult trade right now. Above us, if we continue higher, again, we have this gap zone from the 29th, 83 quarter to 86 quarter. And then below us, we have this very important MC point of control, as well as a naked point of control, 2011.50. The 2011.50 is really, really big. It's the MC point of control from the balance area that we left behind from October through February. This balance area has been taken out. It was expected to be retested here on a pullback. A healthy auction would take it out, break higher out of balance, and then pull back to this area, chop around in the zone, just test it, poke through, and then move up, and then start to drift up for new highs. That's the normal behavior. We generally test our most valuable price before we bounce. We have yet to do that. It just has not been very natural in that sense. So this area has been sitting here for a long time, waiting to be tested. It was 2019 in the June contract, and it's 2011.50 in the September contract. So still waiting for that to happen, but I think today is likely to be another whipsaw day, so be cautious. The primary, let's look at the overnight session now. The overnight session is very strong, a very clean and clear trend going here, a very clear channel uh, kicking off. Key areas to watch on the overnight is again this 2054 area, this 2054-53 area from before. Um, Looking for this area to be tested. If there is a test, the overnight inventory is long. The close is down here, and so is the point of control. So there's an awful lot of long inventory overnight. We're looking for that to balance a little bit. So the primary hypothesis, even though we have a very weak high, so let's clear the scribble up. Let's zoom into what's happening at the top here, and you can see the point of control is right at the high. This basically means there's a powder keg full of energy here, still waiting to blast off. The high is very weak. This is a very blunt high here. We're looking for the overnight high to be taken. So not sure where we end up here in the next 20 minutes or so, but overall, I'm looking for this overnight high to be taken. I'm looking for the inventory to try to balance, potentially testing and holding this area, chopping around and continuing higher. Over the last few sessions, though, this would be the most predictable path because it's in line with the trend and overall demand on this product. However, over the last week or so, we have not seen this kind of behavior. We've seen a lot of testing and then pulling back and then retesting. It's not really getting out of this um, um, balance zone very well. So it's really hard to predict what Hypo 1 is going to look like. I just know that as long as we hold this area here, which we've been carrying for a while, it comes from back here. As long as we hold this area here, then we're likely to go and retest the 77 area from way up here. But because we've rallied so much, we've taken back the entire range of yesterday overnight. There's likely to be a lot of inventory to rebalance. So I expect this to come back to pull back a fair amount this morning. So I'm going to be looking for a pullback. I'm not going to take a breakout trade into the new highs on this weak high. I'm going to be looking for a pullback trade and looking for a spot for it to balance. I'm going to look for a little chop and then look to jump on for a test higher. If it does fall through and then it starts to chop down here, then look for it to slowly whittle its way down into the point of control and the close. And then this means that this double bottom here is likely to go. So if it breaks through and then I see that it's not able to push back through this LVN overnight or this 55 area, 54, 55 area, then I'm going to look for a short for a rotation down. Okay, that's Hypo 2. While I'm here, I have about one more minute left before I let you go. While I'm here, I want to do a quick scan of what's going on in the markets elsewhere. If you look at the Euro stocks, very methodical trade. We balanced up here. We gapped. We balanced. We gapped right here, and we have basically we're basically this morning moving out of this balance area and heading for 34.59. If I zoom into this a little bit, you'll see how methodical this trade is. It came down and it basically tested the prior MCV which is this black line here. It tested it almost to the tick. It went through by about 4 or 5 ticks, and then it came back and tested the current point of control, which is a little bit higher. Tested it right here yesterday and fell back off. This morning it opens, pulls back to the current point of control, the black line right here, misses it by a tick, and it pushes through. Where does it push through to? 34.18 was the gap zone. Here's the 34.18. It's the high of the session so far. It was 34.17. Very methodical trade. This is what I like about this product is it trades. It's got plenty of liquidity and it trades a lot like the ES. What's likely to happen on the Euro stocks is once it pushes through, it's likely to pull back and test this 34.08, but it's likely to gun for this 34.59 with any good news from Greece. One last thing I wanted to show you that's not usually seen or tracked is the Bund, is the German Bund, the German 10-year against the U.S. 10-year, and you could see how stable this has become over the last week. We have been in balance on this spread. The spread between the ratio spread between those two contracts basically means that the flow out of the Bund has stemmed, has stopped, and the Bund and 10-year are trading in balance. To contrast this to what has happened as we head into this Greek deadline on the IMF, you can see how the pattern here, and let me change the color of my pen. The pattern here has been a lot less stable. The pattern has been down with the spread. As it moves down, this means that the 10 years, the U.S. 10 years are getting strong against the Bund, or the Bund is getting weaker against the 10-year. So money is flowing out of the Bund into the U.S., out of the German markets or the European, the Eurozone, into the U.S. And then what's happened since this referendum and so on, that has stabilized, which this is likely to predict that the European market's likely to recover a little bit from here. That's what the spread is saying right now. This may be over your head because you're not looking at spreads, but this is one way to compare one market against the other, okay? I'll leave you with all that information. I'll speak with you tomorrow. Stage 5 traders, we have our webinar at noon today. I've decided not to do the public AMA today. I'll do it next Thursday. There's a few things I'm working on that I want to share with you traders, and that won't be ready till next Thursday. So next Thursday, expect to join an AMA. The AMA generally has about anywhere between 600 to 800 viewers on it, and we try to share something unique. We do it once a month, and it's a chance to ask questions and look at what's the latest and greatest in development. We'll talk to you tomorrow. Take care, and good luck.